Welcome to the deep dive. Today we're jumping into Gold IRA rollovers. It's something a lot of folks look at, to add a buffer to retirement savings, especially with economic uncertainty.
That's right. And holding physical gold, it definitely has an appeal. But the key really is getting the IRS rules right.
Exactly. It can get a bit complicated navigating the specific tax regulations for these accounts.
Absolutely. So our mission today is to unpack those regulations. We're drawing on a detailed article that lays out the essentials, trying to make it clear.
Good. So think of this as, well, your guide to the crucial rules. We want to help you understand how to avoid penalties and make informed choices for your future. So when we talk IRS rules for Gold IRAs, are we mainly looking at tax stuff, retirement account rules? Where do we start?
Yeah, good question. We are mostly focused on the IRS tax code and the regulations around retirement accounts, but specifically how they apply to holding actual physical precious metals.
Okay.
And maybe the best place to start is what kind of metals actually qualify, because the IRS is strict here.
Right. It's not just any gold.
Not at all. There are purity standards.
Okay, so what are they? How pure are we talking?
For gold, it needs to be at least 99.5% pure.
99.5%.
Silver is even higher, 99.9%. And then for platinum and palladium, it's 99.95% purity.
Why so specific? I mean, why those exact numbers?
Well, it's really about ensuring the value, the quality of what's in your IRA.
Ah, okay.
It guarantees you're holding the real deal, basically.
Okay.
Protects the investment against, less pure metals or alloys.
Makes sense. So you find your IRS-approved gold. What's the next big rule to watch out for in the rollover itself?
Okay, so the metal purity is step one. Then you've got the process of actually moving funds or assets.
Right.
And here's one that trips people up sometimes. The one rollover per year rule.
One per year. Okay. Now, does that apply across all my retirement accounts, or is it per account?
That's a really key distinction. It applies per IRA.
Oh, wait.
So you could roll over a traditional IRA once and also roll over a Roth IRA once in the same year.
Got it.
But you can't roll over the same traditional IRA twice within a 12-month period.
Right. So if I do one in June, I have to wait until next June for that specific account.
Exactly. And this applies whether it's a direct rollover or an indirect one.
Okay. What if someone messes that up? What are the consequences? It's probably not just a warning.
No, definitely not. The IRS consequences can be pretty serious. If you violate that rule, that second rollover, it usually gets treated as a taxable distribution.
Ouch. Meaning income tax on the whole amount.
Yes, income tax. And if you're under 59 and a half, you could also get hit with the early withdrawal penalty.
Double whammy.
Yeah, which leads us nicely into that other big timing rule, the 60-day one for indirect rollovers.
Ah, yes, the 60-day rule. Remind us how that works. Sounds critical.
It is. So an indirect rollover is when you actually take the money out of your current IRA first. You receive the funds.
Okay, you get a check, maybe.
Right. And from the day you receive those funds, the clock starts ticking. You have exactly 60 days to deposit that same amount into your new Gold IRA.
60 days? That sounds tight.
It can be. And if you miss that deadline, even by a day,
Then what?
then the IRS considers that money you took out to be a taxable distribution. Full stop.
Wow. So again, income taxes and potentially that early withdrawal penalty if you're under 59 and a half.
Exactly. It really highlights why direct rollovers, where the money goes straight from custodian to custodian, are often much simpler and safer.
Less room for error. Definitely. Now, with all this money moving around, the IRS must want records, right? Paperwork.
Oh, absolutely. Documentation is key for compliance. There are two main forms you'll see in a Gold IRA rollover.
Okay, what are they?
Form 1099-R and Form 5498.
1099-R and 5498, what do they track?
So the 1099-R reports the distribution, the money coming out of your old IRA.
Okay.
And the 5498 reports the contribution, the money going into your new Gold IRA.
Got it. Creates a paper trail for the IRS.
Precisely. Shows the money moved correctly as a rollover, not a taxable event. And it's usually the custodians, the financial institutions, who handle sending these forms.
Right, the institutions.
Yeah.
We hear about Gold IRA companies and custodians. Are they the same?
Good question. No, they play distinct roles, though they work together.
How so?
Think of the Gold IRA company as more of a facilitator. They often help you set up the account, maybe help you choose the metals, coordinate things.
Okay, like a guide.
Yeah. But the custodian is the actual IRS-approved financial institution that holds your assets. They manage the account, handle the transactions, and arrange for the storage of the physical metals.
Ah, the custodian is the one actually holding the gold, in a sense.
Exactly. They're the official keeper of the assets according to the IRS.
So when you're choosing who to work with, what should you look for in both the company and the custodian? Seems important.
Very important. You definitely want experience specifically with Gold IRAs. It's a niche area.
Makes sense.
Look for transparency in fees. Get a clear breakdown: setup fees, annual fees, storage costs, transaction costs, all of it.
No surprises.
Right. And check reviews, ratings. See what other customers say. For the custodian especially, make sure they offer secure, IRS-approved storage. That's non-negotiable.
Secure storage. Yeah, you mentioned that.
Yeah,
Because you can't just stash the IRA gold in your basement safe, can you?
definitely not. That's a huge IRS no-no. The metals must be held in an IRS-approved depository.
Okay.
Which brings us back to moving the funds. We touched on direct versus indirect rollovers. Can we clarify the mechanics?
Yes, please. Let's make that crystal clear.
Okay. A direct rollover. Money moves straight from your old IRA custodian to your new Gold IRA custodian.
You never touch the money yourself.
Correct. It bypasses you completely. This is generally the simplest, safest route. It avoids that whole 60-day deadline risk we talked about.
Got it. Less chance of accidentally triggering taxes.
Exactly. Now, an indirect rollover, as we said, is where you take the distribution first. You get the money.
And the 60-day clock starts.
Right. Then you are responsible for depositing it into the Gold IRA within that window. It just carries more risk. If anything goes wrong, if you miss the deadline.
Taxable event.
Taxable event.
Yeah.
Potential penalties. So yeah, direct is usually preferred.
Okay, direct sounds much better. So let's say the funds are successfully rolled over directly into the new Gold IRA custodian account.
Yeah.
How does the actual gold get purchased?
Good question. So the next step is buying those IRS-approved metals we discussed earlier, the ones meeting the purity standards.
Right.
Typically, your Gold IRA company helps facilitate this. They'll work with dealers to purchase the specific coins or bars on behalf of your IRA using the funds in your custodian account.
So I don't go pick out the coins myself at a shop.
No, generally not. It has to be done through the IRA structure to ensure compliance, make sure the metals are eligible, and maintain that chain of custody. Once the metals are bought, they have to be sent directly to one of those IRS-approved depositories for storage.
Not to my house, not to my local bank's safe deposit box.
Correct. They must go to a specialized, high-security facility that meets IRS standards.
And the custodian arranges that.
Yes, the custodian coordinates the shipment and storage with the chosen depository. You usually have choices like maybe commingled storage, where your metals are stored alongside others,
Okay.
or segregated storage, where your specific coins or bars are kept separate.
Interesting options. What makes these places IRS approved? What kind of security are we talking about?
I think very high security. We're talking 247s, surveillance, armed guards, advanced alarm systems, secure vaults. These places are built to protect high-value assets.
Sounds like Fort Knox.
Pretty close. The idea is maximum security for your retirement savings.
Definitely reassuring.
Huh.
Okay, so we've rolled over, bought the metal, it's stored securely. What are the common mistakes people make after setting up the Gold IRA? Things that get them into trouble with the IRS?
Yes. Prohibited transactions are a big one.
Prohibited transactions like what?
A classic example is trying to use your IRA gold as collateral for a loan.
Oh, definitely don't do that.
Absolutely not. The IRS is crystal clear. That's prohibited. Doing so can disqualify the entire IRA.
Meaning
It's treated as if you took all the money out that year. Huge tax bill, plus penalties likely. It's a catastrophic error.
wow. Okay, note taken. What else?
Another mistake is buying the metals from what the IRS calls disqualified persons.
Disqualified persons. Who's that?
Generally includes yourself, your spouse, your kids, parents, fiduciaries to the IRA, basically close relatives or people already involved with the account.
So no buying gold from your brother for your IRA.
Exactly. Transactions need to be arm's length through reputable dealers, usually coordinated by the Gold IRA company. Keeps everything above board.
Right, maintain that separation. Okay, fast forward. It's retirement time. How do distributions work with a Gold IRA?
They work very similarly to traditional IRAs. You'll eventually have required minimum distributions, RMDs.
RMDs, those now start at age 73, right?
That's correct. The age was recently changed for 2024 and onwards. It's 73 now. And failing to take your RMDs on time results in pretty stiff penalties.
Okay. What if someone wants the actual gold, not cash, when they take a distribution? Can they take the physical metal?
Yes, you can. You can take an in-kind distribution of the physical gold or silver.
Ah.
But, and this is crucial, it's still treated as a taxable distribution.
How does that work?
The IRS basically views it as if the IRA sold the metal for its fair market value and then distributed that cash value to you, so you owe income tax on the value of the metal you receive.
Okay, so getting the physical gold doesn't avoid the taxes.
Not at all. And again, if you take it out before age 59 and a half, you're likely looking at an early withdrawal penalty on top of the income tax.
Got it. Tax implications are always there.
Mm-hmm.
We mentioned collateral and disqualified persons as prohibited transactions. Are there other general things to avoid?
The big overriding principle is don't use your IRA assets for your personal benefit while they're in the IRA.
Okay, like what?
Like storing the gold at home. That's a definite no. Or wearing IRA-owned jewelry, if such a thing were even allowed, which it generally isn't. Any personal use.
So hands off until distribution.
Absolutely. The IRS regulations state that engaging in any prohibited transaction can cause the entire IRA to be treated as distributed. Taxes, penalties, the works. The assets must stay within that custodial environment.
Keep it clean. Now, unfortunately, with popularity comes scams.
Mm-hmm.
What red flags should people watch for with gold IRAs?
Yeah, sadly that's true. You need to be really wary. High-pressure sales tactics are a huge red flag.
Invest now or miss out kind of thing.
Exactly. Or unsolicited calls or emails. Also, promises of guaranteed high returns. Precious metals markets fluctuate. Guarantees are basically impossible and a sign of trouble.
Too good to be true.
Usually is. Do your research. Verify the company and custodian, check reviews on independent sites, look for complaints with the Better Business Bureau or state regulators.
Due diligence is key.
And seriously consider talking to a trusted, independent financial advisor before making any big moves. Get objective advice.
Sound advice. So if you've done the research, what are the top things to look for when choosing a good gold IRA company?
Experience, definitely. How long have they been specifically doing gold IRAs? Look for a solid track record.
Makes sense.
Customer reviews, like we said, what are actual clients saying, and fee transparency. Again, get everything in writing set up, annual admin, storage, buy-sell spreads, compare costs between companies.
Right. Our source article probably mentions resources for comparing providers, too.
Yes, often articles like the one we're drawing from will point you towards comparative reviews or lists of established providers. That can be a helpful starting point.
Good. Okay, we talked about storage needing to be in approved depositories. Any more details on those storage regulations?
Well, just to reiterate, the custodian must arrange and manage the storage. You don't do it yourself.
Right.
And these places, besides the heavy physical security, should absolutely have insurance covering the full value of the metals they hold.
Insurance is critical.
Definitely. And look for custodians and depositories that undergo regular independent audits that verifies their holdings and their procedures, adding another layer of security and accountability.
Okay, audits, insurance, security,
Yeah.
a whole system. Now, what about putting money in? Are there limits like with a regular IRA?
Yes, Gold IRAs follow the same annual contribution limits as traditional and Roth IRAs.
And for 2025, those are?
For 2025, it's $7,000 if you're under 50
Okay.
and $8,000 if you're 50 or older, thanks to the catch-up contribution.
Got it. Same limits, just a different type of asset inside. What if you put in too much by mistake?
That's an overcontribution, and there's a penalty, a 6% excise tax on the excess amount.
Per year.
Yes, for each year, the excess contribution stays in the account. So you definitely want to track your contributions and stay within the limit.
So 6% adds up fast. Okay, let's quickly hit a few common questions to wrap things up. First, just simply, what's an IRS-approved precious metal again?
Simply put, it's gold, silver, platinum, or palladium that meets those minimum purity requirements set by the IRS. 99.5% for gold, 99.9% for silver, 99.95% for platinum and palladium.
Perfect. And if someone's overwhelmed choosing a company, where did our source suggest looking?
The source likely suggests checking out comparative reviews and guides, perhaps on reputable financial websites or publications, to help evaluate different Gold IRA companies based on fees, services, and reputation.
Good starting point. And finally, taking physical possession, the bottom line.
Bottom line, you cannot take physical possession while the metal is officially in the IRA without it being a taxable event. You can take physical possession as a distribution, usually after 59 and a half, but it will be taxed as income based on its value at that time.
Got it. Taxable event either way if you take it out physically.
Okay, this has been a really thorough deep dive. We've covered, well, pretty much everything from purity standards, the rollover rules like the one per year and the 60-day limit.
Uh-huh. And the reporting forms, 1099 Tech and Folly 498,
Yeah.
the rules of the Gold IRA companies versus the custodians.
Right, the storage requirements in those secure depositories, the purchasing process.
And importantly, those common mistakes, prohibited transactions like using gold as collateral, dealing with disqualified persons, avoiding scams, and the distribution rules, RMDs, contribution limits. Yeah, a lot to keep track of.
It really is. But understanding these IRS rules is just fundamental if you want a compliant Gold IRA. Avoiding penalties, choosing good partners, it all comes down to knowing these details.
Absolutely. So here's something to think about as we finish. All these rules, they represent this balance, right? Between your freedom to invest your retirement funds as you see fit and the government's need to, well, ensure the system works, protect tax revenue, and safeguard savings.
That's a great way to put it. It's a constant balancing act.
So as you, the listener, think about your own retirement plans, maybe reflect on which part of these Gold IRA rules feels most significant or impactful to you. Is it the purity, the storage, the transaction rules? Definitely something to mull over. Thanks for joining us for this deep dive.